On today's show, 3 questions. Number 1, so what is a quantum chip? Number 2, are you accidentally overpaying on investment taxes? And number 3, what's doom spending and are you doing it? Welcome to Dentist Money's 2 cents, where we have dentists navigate all the noise. I'm Matt.
I'm Lauren.
And I'm Rabih.
Yeah, you are. Guys, we have a new dream team. We got to do an official welcome. Super excited to welcome Lauren to the 2 cents crew. Lauren, hello and welcome.
Hello. I'm so excited. I'm excited to hang out with you guys.
We're going to take the next 30 minutes and you're just going to talk about you, introduce yourself, your career, how you got. No, I'm just kidding. Lauren has been part of the DA team for how long, Lauren?
5 years.
5 years. I know, it's amazing. One of the main backbone members of our team. You probably, if you remember last year, Lauren was on one of our podcasts, but has not made in the rotation yet of 2 cents. We thought we need to change that. And so we were in a content meeting last week talking about it. And I was like, we're doing this. So here she is. Super excited to have you, Lauren, our newest advisor to the team. And we're going to have some fun today. So let's jump in. Rabih, what the heck's a quantum chip?
Yes.
We talked about this a little bit.
We talked about it a little bit. It's been all over the news. There's a couple of stocks that posted like 800, 900% gain. And I'm like, we need to.
Where were you on that one, Rabih? Where were you on that one, my guy?
I'm sorry. I'm still stuck on nuclear. So many new inventions. So we thought, why not introduce it? Just let the public get, comfortable with it as a topic and see, are we getting ahead of ourselves? Is it a reality yet, or is it just still in the science fiction realm? And when will our portfolios go up because of this, right? Those are the ideas that we're going to be discussing. And I thought, I'm not turning this into a science class, but I just need to give you a little bit of a background. Although
you would love that, though. You would love that. I would turn this into a science class.
Dude, if only I could share my screen on a podcast. So just to explain to you why this is a big invention. So since we've had computers, we had a chip that on it there's something called a transistor. And a transistor is simply a gate that either opens and closes. And what it opens and closes for is electricity running through a certain wire. It either allows it to go or it does not allow it to go. And that binary state of yes or no, on or off, is more like a switch. And that codes information in it. If it's flowing information in, it's a plus sign, it's a yes or a 1. If no information is going through, it's a 0. And as you line up all these gates next to each other, all these transistors next to each other, you'll get a different message of yes, no, no, no. Think of the Morse code, and this is what we call a byte. And then we move from bytes to kilobytes to megabytes to gigabytes to terabytes. And this is the amount of information that is flowing. But the whole premise of it, the logical unit of it, is it a positive or is it a negative? Is it we're allowing stuff to go through or we're not allowing to go through? And with that simple mechanism, that's what we call the transistor, or a chip that has so many transistors on top of it, what brought us to what we are right now. We were able to create AI that we use in our daily lives simply by just using that unit of measurement, of logical transmission. And then in kind of 1940s, we discovered something that changed our opinion of how the universe works. And we discovered that the quantum field in its whole sense was discovered. It changed how we do physics. It changed the world. We were able to split the atom as a consequence. Splitting the atom allowed for that to happen. A lot of innovation came, but it did not come to changing our day-to-day as much as quantum computing and quantum chips might do it. So just to tell you what happened and where the quantum chip story fits in. We said that so far our logical ability to compute is by zeros and one, allowing something to go in, but not allowing to go in. But there was an experiment, and I don't know if you've taken any AP physics, you would remember
about 20 years, but
you would remember it. But I'm trying to just connect the dots for everyone because it seems like it came out of nowhere. But there was an experiment that really revolutionized the way we think about light, whether it's a particle or a wave. It's called the double slit experiment, which really says, imagine that you have a slit and behind it you have a screen. If you shoot a bullet or you shoot a dart, it goes through that slit, and on the screen it just lands in a straight line and leaves a mark equivalent to that dot that you threw it. It's as if a bullet hit a target. But once you start going smaller and smaller in size and you start throwing stuff like electrons or photons on that slit instead of a bullet. What you see on the screen is not a mark in its place, a bullet in its place, but more of like a ripple, like a splatter of a bunch of stuff. And that changed our ideas to understanding what electrons are. And we discovered that electrons, when you're dealing with stuff very, very, very small, it's not a 0 or 1, letting thing go or letting thing go through or not go through. It's more of a splatter. It's anything between a yes or a no, a 0 and a 1, which allows you for greater possibility. So the whole, go ahead, Matt, you had something.
I think my favorite part of this whole thing so far is that you said this was not going to be a science class.
How many minutes in am I? I'm done.
No, Rabih, I absolutely love this. This is my favorite part of doing this, is how excited you get. But it's like, I'm going to preface this. This is not a science class. Okay, there was this 1940s, there was like an experiment called the double split. Do you guys remember AP Physics?
You know, Matt, I'm not even ashamed.
You shouldn't be. You should never be ashamed of who you are, Rabih. I
Thank
love
you.
who you are. This is amazing.
Carry on, please.
Carry on. I'm
Welcome to the
honestly
show,
so
Lauren.
intrigued. This is basically just Rabih educating me and everyone else, and I'm just like riveted by him. And then I'm like, okay, well, now let's talk about, I don't know, BOI. This is amazing, Rabih. Sorry, keep going.
It's fine. So the whole breakthrough is like, okay, if we are dealing with electrons, we have more tools at our disposal. It's not just a 0 and a 1, a binary yes or no. We can actually utilize that ripple effect or like splatter of all these different possibilities and combinations and use that as our core computational, logic. And this was in theory for a very, very, very long time. And the problem is, as you start reducing that transistor in size, as in that barrier that allows electricity to go in and out, as you start making it smaller and smaller, it becomes very unstable and you can't really get any data. So the whole work in that field has been, how do I stabilize this transistor? How do I stabilize that barrier that allows electrons to go through and allows me to count them and make computations off of them? And they weren't able to do so until we started seeing some breakthrough. And here's where the science, class ends. I'm sorry for
Don't be sorry. I love this.
I thought you were saying before the science class begins, I was going to be like, oh, yes.
And here's where we start with the science.
So the first equation we're discussing today, I'm just kidding. So what happened is that we got Google announcing a chip early this year. We also got Microsoft announcing a chip, and then Amazon. And they all happened in the span of a couple of months. But what does it mean when they said they created a chip? The problem was that we just discovered that the whole point of the science was like, how do I make this gatekeeping process that allows me to do computation as stable as possible? And they weren't able to do it. But what happened was, whether it was Google or Amazon, is that they were working on mechanisms, some, stuff that allow that gate to be stronger, to control the stability, control the error of it. And then Microsoft came with a different idea, was instead of creating a way to stabilize that gate and allow electricity to go through, they decided to create a way to embed so many gates in that one, so that if one fails, you can still have stability because it's more of a robust system. And this is going to allow us from now on to create chips that has millions of these transistors on top of them, those, what they call them, qubits, quantum bits. And then at that point, we can, use them and have them in our softwares, etc. The only problem so far with these is that you can only get this stability that we talked about if they are frozen to like negative 230 Fahrenheit. So they have to be in a lab and you have to freeze them. So the only way we can use them, it's not like tomorrow we're going to have a computer issued by Apple that has a quantum chip inside of it. We're only going to connect.
Put it in your freezer. Yeah.
Yeah. You have to connect to the cloud like you use Google Drive or you use Amazon Web Services. You have to reach out to the cloud and ask the cloud to do a computation for you based on their quantum chips that they have frozen. So this gets us, I hope this summarizes, tells us how we got there. And this comes to the question of an investor. So how great invention, yay for humanity. This is going to really help a lot in microbiology and protein synthesis, a lot in finance too. But how will that translate to higher stock market? And this is where the big question is.
And Rabih, first of all, that honestly was an amazing summary. I love it. To this point of not only from the stock market perspective or the investment perspective, can you also talk about, you just mentioned a couple of things. in layman's terms, talk about like, what does this mean for like, what's kind of the so what of this as a society? Is this is a data thing? This is a computation thing? I'd imagine this is going to permeate every single part of the world, every industry. What's a really basic way to describe this for people of like, why should I care as a person out there, a dentist or whomever?
Yeah, it's a new technology and it has its benefits and it has its problems. One of the things that we know about computing stuff or doing math or just running a computer based on quantum chips, a quantum system, is that it allows to do computations that would have taken trillions of years using a regular computer. They can be done in 5 minutes. So a lot of the problems, whether they are math, whether they're like, here's why it's going to help science more than it's going to help our day-to-day life. Like we barely know how to use the calculator on our iPhone. Like this is not for the usual day-to-day people, but scientists are going to be able to code proteins much better and identify which gene corresponds to a disease much better, help us to come up with a vaccine faster. It's going to allow us to understand how atoms, when they are, right now, there's another science class, I'm sorry, but right now they can only model how one atom or how a bunch of electrons interact with each other. But once you have so many electrons together or so many atoms to come to the, I don't know, to a carbon atom or an oxygen atom, etc., they don't know how to model it. There's so much randomness. And because there's that so much randomness, you need a computer that doesn't only do 0 and 1, but actually computes in randomness, like a quantum chip. And will be able to really expand the frontier of science as we know it. And will also actually, there are like hypothetical applications for it in finance. Right now, we do a Monte Carlo, or we just stress test on historical events that has happened with, a quantum way of computing stuff. You can even explore possible crashes that we haven't seen before. A lot of this is great. A lot of it is great. And I think the most important one, which we talk about a lot, but not enough, is that we moved into an age where we use AI models like ChatGPT to, it's really efficient. It's making our life easier. It's reducing the time it takes us to plan, to think, to make decisions. But those models have already consumed all the data that has existed in human life, like all the data that we put on the internet, all the books, all human civilization since we started writing has been consumed by these models. So unless you feed it new data, it's not going to learn. And a great way to generate new data at a faster and a faster pace is by using these quantum bits. So it'll allow us to generate new data to train these models to allow us to leverage their ability more and get us to a different spot.
Rabih, I couldn't help but think when you were saying before what used to take us maybe generations to calculate, now it's going to take 5 minutes. The human example, if we're going to use a human analogy, it feels like we're coming from maybe like the Matt era and entering the Rabih era. It's like we've been fine, but now we're entering Rabih era. Rabih is the quantum chip of humans. So that's all I could think of. Would that be a fair way to put it, Lauren? I think you'd agree with that.
Absolutely.
I choose to remain silent.
Rabih's like, I'm not going to say. So let's talk about. So this again. So we cannot overstate. I don't think we can overstate, Rabih, to that of what this is. What this is going to impact. I think we talk about things like cancer research, or just disease in general. Like think about how long it took for. Like, I was just thinking of like, the polio vaccine. Things like that. It just accelerates the timeline of how much we can research and the things that we can do with bringing things like that. But then you're mentioning investment from an investment perspective, the stock market. Let's talk about that. So
right now, it's just because we do not know how the stock market evolves. It's really a random process. And you can't, computers are something very deterministic. They follow a certain set of rules. They might incorporate some randomness, but a quantum computer can just do much better calculations. It's going to help in risk management. The thing is, quantum applications on finance still haven't started. It's more hypothetical what we think how it's going to get us there. So as that technology rolls out in the next couple of years, we'll see where the application takes it. But we think it's going to be net positive, then it is going to be a net negative. But the idea is, and here's where we don't need to differentiate, Does this mean that quantum stocks prices have to go up already? And we are seeing this posted huge returns in these stocks. Is it based on anything yet? Like, this is the question. Like, we now hopefully have a common ground on where the technology has reached and why it's important. But does this justify that we see financial asset prices go up simply because of it? That's the question. And here's, I think, where we need to draw a really good barrier or like separation between the advancement of technology and the betterment for society as a whole, and the actual valuation of financial assets. While they are correlated, like the stock market will do better as the quality of our lives does better and as our civilization improves and it gets better, it will. But it doesn't have to if the betterment of this society does not translate to monetary gain. And this is the capitalist side of the story that we should really be aware of. Like,
we mentioned this a couple of weeks ago, Rabih, this exact concept. Yeah,
we were talking with a client about it, and we thought we'd just talk about this further. Like, we can discover the cure to cancer tomorrow, which would be great for everyone on this planet. But if that cure does not translate to profits to a certain company, we might not see pharma stocks go up. Like, it has to translate from, in a capitalistic manner, to better revenue, better, or cost cutting in a sense, or expanding to new markets. So far, these innovations in the chips that were introduced by Amazon, Google, Microsoft, as well as the small cap stocks that have exploded in their return, but we still don't see an application. We don't see a business model for it. How will they use? How will they generate money? And that is what is yet to be seen. So all this hype is great. It just tells us people like our civilization to advance and discover new tools. On pen and paper, there's no money making process yet, and that's something to be very careful about.
Well, Rabih, I got to be careful going down this road. But I do think it's interesting when you say that of like, is that a barrier to its because we live in a capitalist society, because of these companies need to find an incentive or motivation to have it be applied in a way that can generate profits or make cost cutting happen or whatever. It does make one wonder, is that a roadblock to its actual use or application? Does that make sense?
You know what I can think of? Maybe too political, but like the defense industry. Like, the defense industry uses technology that's still not mass distributed. Like, GPSs were there almost in the First World War, but we didn't start using GPSs as humans until like the 50s, 60s. So there is always that. These are bottlenecks. Just thinking of discovering a new technology, like discovering fire, and suddenly humans are smarter, is too ideal in this day and age. We just have to take that with a grain of salt. That's my opinion.
Yeah, we'll leave it there before we get in too much hot water of our discussions. But Lauren, any thoughts on this at all, on the quantum chips and everything Rabih's talking about?
No, that's way interesting. And thank goodness for GPS. We'll see what happens.
Well, what I find interesting too, Rabih, you mentioned that there's 2 or 3 or 4 companies now that have all like at the same time come out with their own version, you said. I just think that speaks so much to like how innovation works, of like, it doesn't happen linearly. And I think our brains always think like that, but it's all of a sudden, like, I think of like man-powered flight, right? How many people were battling for that, the 19th century or the 20th century, kind of end of the 19th century, and then just how quickly it happened, like slow, and then all of a sudden this massive, and we're seeing this in AI, right? Same thing. I was going to ask.
Interesting.
Go ahead. No, go ahead.
No, go ahead, please.
I was just going to ask you the relationship between AI and quantum chips, and how is all this interrelated, if it is at all? Because AI has been top of people's minds. Kind of help us parse through the connection there.
Yeah, it's going to allow AI to do computations much faster and generate data that helps us train those AI. That's the big point. But when you said that innovation just happened suddenly, actually Microsoft said that they've been paying for that department developing that chip for 17 years now. So the innovation, and it really reminds us of like a long-term investment strategy, right? Like, you will suddenly see the result, but to get to that result takes years and years of compounding your knowledge or compounding your nest egg, until you get to a point where suddenly it's apparent to everyone that you're in a very successful position.
Well, and I also think it's funny too, on that point, we had a conversation recently. We had an AI workshop, right, for Dentist Advisors to think about and start strategizing how we can better utilize AI in an effective way. And something that was super interesting with the consultant we were talking to about this that I've never necessarily thought of, but it's funny how the public picks up on these things. Like now all of a sudden AI, we think ChatGPT, but AI has been around for a long time. Like Rabih, you mentioned GPS. We've been using AI with our phones, like Google Maps or Maps in the iPhone, for how long has that been around now? 30, 20 years?
Wow.
A long time, ever since we transitioned from MapQuest. But like that's AI. ChatGPT is an LLM, large language model. It's a part of that, but it's not AI. And so I just thought that was interesting. It's probably the same thing with quantum. Now everyone's talking about quantum chips. There's been so much going into this, like you said, Rabih, for the last 2 decades. Now it all of a sudden feels like, where did this come from? It's like, oh, this has been in the works for a long time. We just don't see it. Now the public's talking about it at the finish line, basically. So it's kind of interesting. Okay, any other final science lessons for us, Rabih, or top?
No, I'm sorry if this was heavy, but I just don't. I was
love it.
bothered. Okay, I really was bothered when suddenly quantum chips entered the conversation. I was like, no, this is not something that dropped out of the sky. This is something that has a natural continuation to how we've done physics, and now we're gonna apply it in our day-to-day life.
Quantum chips have entered the chat. Yep, I get it. No, Rabih, I think it's super helpful. I hope our goal here is with this kind of stuff and bringing you on talking about this is to give people some perspective on that and some knowledge and education around it because there's so much crap out there. So hopefully, yeah, I think it's super helpful and I find it really intriguing. Okay, Rabih, thank you for that. Let's move forward from quantum chips to taxes, the most amazing show you're ever going to hear. Are you accidentally overpaying on investment taxes, Lauren?
So I have been thinking a lot, especially while preparing my own taxes and getting some tax questions from clients. And so I thought going over some definitions and some thoughts and opportunities might be a good thing for us. So kind of taking a step back from quantum chips and talking about.
But something that's equally as confusing for people.
It is, actually.
For sure. It really is.
No, it really is. So just a little bit about short-term versus long-term capital gains, because even just waiting one day could save you a ton of money in taxes. So a little bit about short-term capital gains. If you sell an investment after holding it for 1 year or less, the profit that you make is taxed on ordinary income tax rates, which can be taxed as high as 37%. But if you hold it for a year or more, so even just one day after a year, you get taxed at a lower rate, typically 0, 15, or 20%. It depends on your income level. But so important tip is even just waiting one day can save you a ton of money. 37 is a lot more than 0, 15, and 20%.
Huge. Could we give a quick example here, just people listening? So this applies to, let's say, a brokerage account. So Lauren, you're saying, I buy $100,000 worth of a mutual fund, a stock, or an ETF, an investment of some kind in that brokerage account. That $100,000 is what we'd call your basis. So if you sold that the next day, 100,000 is still 100,000. You'd pay no taxes. This is really confusing for people. But then you're saying that 100,000 increases to 200,000. So now the total position is half and half, 100,000 and 100,000 gains versus basis. You're saying, if I sell that total position now worth 200,000 at 364 days, or I guess 365 because it's a year or less, I would be taxed on that 100,000. It would basically increase my ordinary income by $100,000 tax at that level.
Yes.
In 66 days, all of a sudden I'm taxed on that 100,000 somewhere between 0 and 20%. Massive, massive difference.
Significant difference. And I feel like a lot of people don't look into that and don't think about it. So when you're thinking about selling some investments, to look at how long you've been holding them and make sure you have someone looking at that for you.
Huge.
Which also leads me into tax loss harvesting. I feel like Rabih was probably the expert on this, and I feel like we go to him a lot for all of this. But often I hear a lot of people say, oh, I'm just going to wait until this investment is positive, or wait till this investment goes up. First of all, we have no idea if that's going to happen at all, But second of all, you can use that to your advantage if you're selling things anyways, because if you have a gain on something, you can offset that gain by that loss and pay less in taxes. So for example, if you have a $4,000 gain and a $2,000 loss, instead of paying on the full gain, you only pay it on the net of $2,000. And on top of that, if you have losses that exceed those gains, so if you have a year where you have a lot of gains, you can offset it to your losses and carry it over to your ordinary income up to $3,000 per year.
Yeah, they need to increase that, by the way. That's been the same for a long
That's
time.
cool.
It's so crazy that they don't increase that. But Rabih, I know you've got thoughts on this.
Mm-hmm.
Yeah, it goes both ways. So if your investment goes up, appreciates, and you have a profit, you have to pay gains on it, capital gain tax on it. But also, if you chose to take on a risk and your investment drops in value and you had to exit, that loss is tax deducted. And it applies to the same rules. So if it's short term, it's a tax deduction at your ordinary income rate. But if it's a long term holding, the tax deduction is at the 0, 15, or 20%, as Lauren mentioned. And I think it has two major points. The government wants to be your partner in you taking risk, because taking risk, investing your money, allows the money to circulate in the economy. So once you're rewarded, you're paying your fair share. But also when the tide goes against you and your investment is losing, you're also getting the benefit of the doubt. You don't have to pay taxes on it. That's the first one. The second one, and I think it's more behavioral, and Matt can help me on this, but I think a lot of people are worried that they're going to put their money in the market and then it'll crash afterwards. So they would sit on the sideline waiting for a dip to ever happen, and we don't know when that dip will happen, and they will miss out on any gain during that period. But what tax loss harvesting tells us is that you can invest at any point, and if the market ends up dipping, you will harvest those losses and stay exposed and ride the wave back up while harvesting some capital gain, tax credits along the way. So it just behaviorally makes it easier to put yourself in a position that is fully committed to staying in financial markets.
Yeah, I love that, Rabih. And there's so much tactical stuff here that we could spend a lot of time on. But I think a couple of key points here for that to work strategically, Rabih. And I love the behavioral side that you're hitting. But if we talk a lot to people about the limitations, especially in a brokerage account, and I think that's probably a key distinction we should make here too, Lauren. I love that you brought this up. Of when we talk about a qualified account like an IRA versus a brokerage account or a non-qualified account. When we're talking about capital gains, and this is, again, often confused, we're only talking about a brokerage account because none of this matters in an IRA that's insulated from taxes or the day-to-day or the year-to-year capital gains taxes. But Rabih, to that point, if you have a brokerage account, this is one of the limitations of, let's say, like a target date fund or a kind of all-in-one fund, is you can't tax loss harvest with a single fund, a single mutual fund. So when someone says like, S&P 500, set it and forget it. Like, this is where we struggle with this concept of like, well, yes, if you're comparing that to day trading stocks, yeah, the S&P is going to win. If you're talking about an optimized portfolio that allows you to tax loss harvest throughout the year and be really strategic and again, optimized with that, you can't just set it and forget it with a single fund. So I think that's a key distinction to make here as well. And then the biggest thing that we see all the time is dentists out there, people out there that are like, oh yeah, we're tax loss harvesting in December. And I'm like, okay, but that's not how you do it. Because whenever is it going to be like December's the time to do it? You should be doing this throughout the year. So sorry, that probably went a little deep, but I wanted to at least mention those key distinctions there on those accounts. I'll throw it back to you guys in the studio.
No, I love it. In the same line of talking about like capital gains and tax loss harvesting, I feel like something that's also really cool is for the people who are like charitably inclined, being able to donate stocks to be able to use those funds and not pay on those capital gains. And again, Rabih can probably talk more about this. But I think it's so cool and a really good strategy to use to see if either the church that you're donating to or the charity, if they take stocks instead of full cash, because there's a lot of opportunity with doing that as well. And I feel like not a lot of people know about this. And it's a really good opportunity to be able to offset or offload, if you will, really high capital gains and not have to pay them, but still being able to donate and put to a charity that you choose. I'm sure, Rabih, again, you have things to,
No,
to add on.
I love
He's
what you're
itching.
mentioning. You're hitting all the major kind of topics in taxes and how they relate to investment. Like a lot of people just think, oh, I'm getting my W-2, I have to pay taxes on it. We move forward. And the same thing should apply to my portfolio. There is more that goes into it. You mentioned the holding period, you mentioned tax loss harvesting, and you're also mentioning, charitable donation, which is a way to manage this tax impact. And it's a case-by-case scenario depending on every portfolio. But it's really important to reiterate those points and to let the end investor know that they have options at their disposal. And it's not just a tax bill that you have to deal with at every April.
Yeah, well, and I agree, Lord. I love that you're hitting this. You're hitting this from every angle. The other thing, as mentioned earlier, the other thing you're hitting is asset location. We talk about asset allocation, meaning the mix of stocks and bonds, but what you're hitting on, how critical this is, Lauren. The technicalities of this are, again, asset location. It matters where you're holding specific investments from a tax perspective. It matters if holding, let's say, like a bond fund that's kicking off a lot of interest, not holding that in a brokerage account, or where you should hold like a high growth, low dividend type paying investment in a brokerage account. Like asset location matters. We're not trying to overwhelm people. Hopefully, we're just trying to show you like this is more than like this reminder you're bringing to people is like there are some technical things you want to be educated on and know about more so than just the difference of like cap gains versus or short term versus long term. So it's great. Lauren, any other comments or thoughts on this? I know there's a couple more things I think you wanted to hit.
No, the only last thing I have is how crypto is taxed, because I learned about this, but crypto is taxed differently than stocks. So IRS treats crypto as property and not as currency. So it means every sale, every trade, and every purchase that you do is a taxable event. And I just thought that was really interesting. I didn't know that. So
yeah, I did not know that either because I don't really mess with crypto too much, but it's treated as property, not a currency. That's interesting.
So if you use the Bitcoin to buy something, that's still considered a taxable event. I think most people think of it as once they sell the crypto, that's a taxable event, but using the crypto is also a taxable event.
Got it. Interesting. So yeah, because it's not again, it's not a currency. They're not taxing it as a currency. They're taxing it similar to it's stock or real estate.
Mm-hmm.
Interesting. Okay, Rabih, any thoughts on that, on the crypto stuff?
No, I try to stay away from crypto, my opinion. So I really never had to pay taxes on it. But yeah, I don't know if you guys filed your taxes. I use TurboTax, and every single, like recently, one of their questions, like, have you sold or bought any crypto? Like they want to know, and it is its own category.
Yeah. Because I know that for a while, this has probably been a long time, but I know that for a while, they didn't really know what to do with it from a tax perspective. And I think there was some ways people early on were taking advantage of how to get around some taxes. So they've since, again, the IRS tends to figure that stuff out pretty quickly. Okay, that was awesome. So we've gone from quantum physics, quantum computing to taxes to now we're just kind of going down the row of complexity. So now we're at spending, doom spending. So I got the simplest topic, and we all know why. Okay, so number 3, what's doom spending, and are you doing it? I just thought this is interesting. This is coming out. We're a little bit delayed, so we didn't want this to be. We're going to get to the tariffs, or I guess when you're listening to this, last week we talked a lot about tariffs, the market, all the craziness. This is more kind of like general things that we're seeing as a result of the tariffs. So this is, first of all, when you guys hear doom spending, is this something you've ever heard before?
I've heard of doom scrolling.
So that is basically it. Rabih, you're nodding. You've heard of doom spending?
Yeah, doom spending. This is more related to my home country of Lebanon, but there was a banking crisis and people could not get their money. They could not trust the banks anymore. So they decided to just start buying fancy cars and fancy real estate, etc., just because they don't want to put their money in the bank. And we called it doom spending and people were taking vacations like, the world is collapsing anyhow, let me enjoy it. So it actually happened across a whole country for a while, and it was fascinating to watch.
Yeah, that sums it up. I think that's kind of where people are. What's happening with people? They feel like the world's falling apart. This is in direct. What they're basically indicating is this is in direct response to the tariffs, right? That are officially in place. So to this point, creditcards.com has a report out that said 19% of adults have basically indicated they are intentionally doom spending, which is exactly what you're saying, Rabih. Which I'm actually going to be very interested, Rabih, what the numbers, we obviously track a lot of the numbers, what's happening with consumer spending. It's going to be interesting what this does to inflation, but just the numbers that we're tracking on a regular basis. So 19% are doom spending. 28% of Americans have already made a large purchase, such as a home appliance, home improvement supplies. Another 22% also started stockpiling certain items, including non-perishable food. And what could you guess? Toilet paper. It's always toilet paper. Toilet paper is making a comeback. Over-the-counter medications. So people are starting to stockpile, and they're also starting to doom spend, similar to doom scrolling, but with their credit card. So why? I guess the biggest thing here is, okay, what's the so what? What does this matter? I think one of the biggest issues here is the fact that we have now gotten to a point we are over $1.21 trillion in credit card debt. There were some numbers here. I think 4% of credit card borrowers are taking on more debt this year, according to creditcards.com, with this doom spending. So that is kind of the untenable kind of doom cycle we're in with this, is that these tariffs, what we've already been experiencing, the fact that 70% of our GDP, we all know, is consumer spending. The entire ecosystem is already set up for this. But now we're starting to see the results of $1.21 trillion in credit card balances. That seems difficult to sustain. What are you guys' thoughts on this?
Walk in, Dave Ramsey.
Yeah, Dave Ramsey's entered the chat.
Yeah, all of a sudden he just pops his head in.
Like, listen, idiots.
No, that's crazy.
Honestly, I want to take a different angle at this. I think maybe the example of Lebanon or the example of those doom spenders in the US are just only one point of the population, because I want to bring in the case of Europe. Like in the US, with all the ups and downs that the economy goes through, average saving rate for American consumers around 5%, 4%, right? Whereas in Europe, which has been facing lower economic growth than the US, so they have more reasons to be doomsayers, right? Their economy is not growing as much. It feels like they are stuck in a constant recession. Like this is the feeling of the average European consumer. But those people's savings rate is around 16% on an average. So it really depends on your personal values and how you would want to relate that to money. Some people in times of adversity or uncertainty, they just rather decide to sell them all, where others would like to go into like survival mode and start stashing in cash instead of spending it. So yes, I think the big picture is that it really depends on the person and on their values. But for some people, yes, it is valid. They're just going to go and decide to spend it all because that is more meaningful.
Yeah, I think it's a good point, Rabih. I also can't help but think about like the cycle this creates around like you mentioned earlier, like the behavioral or the psychological aspect. Like I think there is something to this mimetic desire, right? So this idea that the more people start to see it, they read articles about it, it like almost feeds on itself. So then more and more people are, oh yeah, I'm going to go do that. Oh, you bought an oven? I'm going to go buy it. Like whatever home appliance, probably an air fryer, but it almost like feeds on itself the bigger the narrative grows. So I think that's something to watch as well. But again, from an economic standpoint, I guess there's some positive to this if it continues to push spending and keeps the economy afloat, even though there's a lot of concern around what's happening with the economy with all the tariffs. Probably a short-term blip. I think long-term issue is just I'm looking at that credit card debt, those credit card balances, and I'm like, man, that's a problem. That's going to be a concern we need to be tackling at some point or another. Lauren, any thoughts on this are you on doom spending or anything we've talked about?
No, I don't have anything.
Awesome. Oh, go ahead.
I just said that's interesting.
Yeah, it's
I have a lot of friends that are asking me for more budgeting help lately. I've been noticing that.
I bet.
Ask me for more help for sure.
Yeah, I think.
Are you a doom spender, Matt?
I can say safely, I am not a doom spender. I'm not a big spender. If I'm going to doom spend on anything, it's like maybe an extra trip to Chipotle. Maybe that would be my way to doom spend.
But Chipotle somehow. At this point, we're just trying to get brand deals.
Yeah, I'm just trying to get a brand deal from Chipotle. That's my lifelong goal. Is can I get sponsored by Chipotle? I can safely say I'm not a doom spender whatsoever. So, okay, guys, this was awesome. Any final words, Rabih or Lauren, on anything we've talked about up to this point?
I'd like to think that taxes are more complicated from quantum computing. Just a hot take out there.
Probably true.
It is really complicated. Honestly, if you put quantum chip computing aside, I think there is a link between the complexity of the tax season and you as a person and whether you act by doom spending or just deciding to save. Like a lot of uncertainty about your present shows up, and especially when you have like deadlines and homework such as tax, or you start hearing about the news and you don't know how to decipher it, so you just get set in a certain behavior or habit. And some of these might need, Lauren on your side to help you figure out a budget or talk to someone about it. I think they're related. Putting quantum chip aside, but yeah.
Yeah.
Spending, you reach out. I will help you. I'll get
Yeah.
you.
Lauren will definitely help you. And I think that's a really good point, Rabih. And I guess that'd be my takeaway message is like, if you're doom spending, don't do that.
Maybe don't.
Yeah, and I get it. I think it's a grasp for control. I totally get it, but I think that'll just perpetuate a negative cycle like anything else. Might make you feel good in the moment, but what'll make you feel even better would be actually taking control of your finances, organizing your money. It's kind of this idea relating it to weird nutrition and working out. It's like eating the junk food versus actually finally taking the step to start tracking your food and getting organized and going to the gym. Doom spending is kind of the financial aspect of that. So, guys, this was awesome. We covered a lot. We have covered some heavy stuff for the two topics, and then some light little air fluffs at the end to try to bring it home. Speaking of all this, since I have no transition here, there is something cool that you guys should come check out this summer, June 20th and 21st, the Dentist Money Summit. You get to meet Rabih, you'd get to meet Lauren and the DA team, and a lot of like-minded dentists that are there to learn about all the stuff we're talking about. But really, more than anything, the theme is planned for the present. Is how do you become more intentional with your money? How do you find more meaning in your money and your finances? Kind of answering the question like, what's the point of all this? We're going to talk a lot about that with some incredible speakers. We'd love to hang out with you. Dentist Money Summit, June 20th and 21st. Park City, Utah. You can check it out at dentistmoneysummit.com. For now, Lauren, Rabih, thank you for being here. Everyone, thanks for listening. Till next time, that was our 2 cents. Bye-bye.